morning, everybody. It's Christian from Serene Education with the four majors analysis update for the 6th of October 2011. So think about that one for a moment. Just going over the four majors using our CTC strategy template, the count the cash system, an indicator that Nikki and I have been using for years, working on 6 time frames, starting with daily, working your way to a 5-minute chart, intraday chart. Basically, rules state that we need to see a red arrow, red candle, and the CTC bars on either side to go red to confirm a genuine buy or sell signal. Blue on either side for buy, red, and we look at support, resistance, trend lines, etc. Moving average crosses to give us further confirmation. So, without further ado, let's crack on. Daily, yesterday, what did we get? Indecision. Very indecisive. Price was ranging yesterday. In particular, what we want to see is, ideally want to see the price breaking above prior support. This could potentially be the new resistance. We've had a second consecutive day now of resistance and a doji. We would like to see, as I mentioned before, a doji where you're having the open and close relatively on top of each other, and a wick on either side, just confirming that there was no decisive move by the market yesterday. Even though we did have a trading range, there was more to the downside. There was more action at the downside. However, we're still close to the upper end of it. So market sentiment is, we're still looking possibly bullish to the upside. However, we're still indecisive as to when or where or how is it going to occur. We're still waiting for that market, that news or that event to occur that will push it up there. So ideally, if you do get this indecision candle, you'd like to see a decisive candle, a decision candle. It's the same back here. We saw selling further by a bit of buying, and then we had indecision. It was either selling, profit taking. Now we're waiting for a second extension lower, or we're going to still take some more profit, and we wanted a decision candle. We've got that decision candle, and you can trade the decision candle, and that's what we saw. Further day of profit taking, and then we saw a drop to the downside. Same over here, spinning tops, also very indecisive. And what you want to see is a decision. Asian market is opening slightly low this morning. Okay, as we go into today's events, and today across the board there's a lot of red impact news, a lot of it, tons of it. Starting with sterling this morning on Halifax. HPR month-on-month figures. Then we have the CPR results for the Swissy. Then we go into German factory orders at 11 AM GMT for Europe. And then the big ones, the asset purchase facilities figures, which coupled at the same time with that with the official bank rate, interest rates. Are we going to see Bank of England keeping the rates at 5.5%? I don't see them raising it, and I don't see them dropping it. I think we're going to see that staying the same. Then we have the MPC rate statement. Okay, that's tentative. That can come out any time after that, 12 noon. Then we go into the European and go back to Europe at 12:45. So this is going to be very interesting. If Sterling's announcement comes at 12 noon, and then the European one comes out 45 minutes later, so that's going to be quite interesting to see what the Bank of England does. It might reflect on what the Europeans do. Used to say, but are we going to see the bank? We have the minimum bid rate figures at 12.45, which is the interest rates for the eurozone, currently at 1.50%. Are we going to see the boys bring it down, drop the interest rates? I've got a funny feeling they actually raise the interest rates a bit too early. I think sterling. England in particular, United Kingdom, has done really well by keeping theirs pretty low. I think they've been in for a lot of stick, but I think it's been necessary. 1.5%, I don't know if that's really helped the Eurozone countries all that well. And are we going to see them backtrack and bring it back down again? Maybe 0.75%? Maybe down to 1? Who knows? But it'll be interesting to see. So yeah, we're going to see a lot of volatility going into these orders. Both forecasts for both the official bank rate for Great Britain and the minimum bid rates for Europe are both unchanged. Their forecasts are unchanged. So the previous figure for sterling was 0.5%. They're expecting the same forecast again for this month. The same for euro. It was 1.50% last month, and they expect it to be the same, unchanged this time. So if it does come out less, you might see huge moves across the European sector. But then we go into the afternoon. We have Canadian pending building permits month to month. That's very interesting to see. There's a noticeable change in this figure. The previous figure was 6.3%. It's down to they're expecting a forecast of 0.6. So a massive slowdown there on building permits being passed. 1:30 p.m. GMT this afternoon, we have the ECB press conference. They're going to get together and they're going to there's going to be some news relating to Eurozone, no doubt. Probably Greece in particular. There's talk about governments as a whole in Eurozone trying to make more money available to the banks, etc. Then we go into 1:30 p.m. this afternoon, the US unemployment claims. This comes out a day before the non-farm payroll. Previous figure was 391,000 jobs or people that were unemployment claims were put through. They're expecting a larger figure, no doubt. Things haven't got better. Last year's one, we saw no jobs. Last month's one, we saw no jobs being made available. So unemployment didn't really work. That's that figure. So unemployment claims they're looking for an increase in unemployment around about 411,000. So a noticeable jump there. So lots of news today. We're going to see a lot of volatility. A lot of people out there are going to be umming and ahhing and deciding what they're going to do. So factor that in. Euro, in my case, didn't trade yesterday primarily because we've been trading in this consolidation band. I don't want to be trading sideways. I want to be trading breakouts. For me, this is what I want to be trading. I want to see this, and I want to trade that momentum. So, indecision, want to see a decision candle. If it is decisive and we see good news coming out for Euro today, we see the market's still very happy with what the news is out regarding the banks being able to try and make more money freely available to the banks, then we could see further upside. And we'd like to see at least a break and punch and close higher than 13,400, which happens to be a nice support and resistance level as we speak. So intraday, 13,400 is possibly a mainframe, but you could also, if anything, look to see if price can break above this noticeable resistance here on the body. 1, 2, 3 bodies going into the fourth one. Asian markets still trading below that, so there's definitely a body resistance here, and then you have the top wicks. So if you look intraday, what is that body one? You're looking at roughly 1340.50. So there's a range over there between those 2 points. So if you go intraday, if you go to a 4 hour, for example, you can see quite noticeably that the 13,400, there we go. Quite clearly on a 4 hour, we've had price support and resistance, and that's the daily major psychological break. It needs to be trading above. Breaks above that, then ideally we could see possibly price rallying to at least, if you take the trends here, for example, then we could look at the potential of that high there, 13,6,500 as our first target. You could look at potentially the next swing up at the 13,7,500 and the next swing up above that at 13,900. Then we go back to close to 1,400, which is also a very strong psychological barrier on a daily time frame. So those ones I'll put in black. So you can see 1, 2, 3 positions to the upside. The institution moving average coming in at 1394, but 1,400 ultimately being our next target. But we have to break above the 13,400 to start with. A failure to do that, then obviously we're looking at further. It's just a consolidation, bearish consolidation to the downside, because we're still dictated by the intraday trend or the daily overall trend, which is still negative. Okay, very, very important. Got to set yourself rules. You've got to say to the market, great, this is what's happening, this is what I want you to do, and once you've done that, then I'll look at it. Because you could either be trading above 13,400 and we could possibly come into contact with possible support and resistance levels here. So could see further consolidation as we go into into Friday tomorrow, and then we have a whole lot of other news pretty much centered around non-farm payroll. Very interesting. If from the state side, we have to see positive figures at the moment now as the slowdown really hits the markets across the world. We're seeing more people out of jobs because there's just no production at the moment now. So a good sign is we're seeing a lot more jobs being made available. If there's less unemployment this afternoon and figures tomorrow are great, then it means that there's jobs being produced, and then we're going to see the US dollar rally. So we might get some movement. So very important. At 13,400, break above that, has to. It's a good sign if it does, but then just be aware we've got this downside trend to the upside. So what do we have CTC wise? Well, as you can see, very indecisive. A lot of red. Then we're starting to see a bit of blue here, but we're still trading in that consolidation. There's a definite consolidation band here. We don't want to be trading that consolidation band because you get a chance to be faked in. You've got to see a definite bearish breakout. Has to. And then when you see the breakout, you've got to look and see where it is trading in conjunction with the overall market trend. So over here we have blue, and then we've got indecision now. So not all that good. I did mention that there was that intraday 1550, 13,500. That is right there. So be aware of it. You can see a lot of wicks to the upside there, faking people in. Got to break above there with significant move. We've got to see a genuine move to the upside, and that's got to actually tie up with most of the other time frames intraday. So if you want to, you can either say, listen here, the market can have that. I know there's a lot of pips in here, though. This is the thing. If you want to trade smaller time frames, then there's a lot of pips to be had here, but you run the risk of being faked and not going pretty much anywhere. So very, very important. Look at where potential support and resistance are. You can see noticeably here, bound. It's intraday, a lot of support going through there. So as long as it stays above that, then ultimately we're going to see a retest of the 13,500 mark and potentially further upside movement, or we're going to see a rollover. And this is where you can plot something like a relative strength index on the top to see, are we getting divergence as price has been hitting this resistance level. Because as RSI is coming down, it's telling you that the momentum strength is getting less and less, which means that there's less buying occurring and further selling to take place. And if you see a break lower, it'll just generally mean we're going lower. Next up is sterling. Good old cable. Let's have a look at the daily. Yesterday we had more action at the top end of the wick after a noticeable down move the previous day. And literally almost touched the 3500 mark, which happens to be a very strong psychological support and resistance level. Going back, if I just zoom out, you can see a noticeable support and resistance in the past, especially through the latter part of August and September of last year and through December and January of this year. So, noticeable bounce, a lot of selling, and then we still had that hesitation. That could have continued, but because we were trading at a 3,500 strong support, price support, we saw psychological bounce, and that's taken 3 days. Then we failed to see it really materialize. Pretty much found resistance at the 15,600 mark. Well, they're robust just below it, and we saw a lot of wicks, indecision, shooting star, bang, price fell down. Gap down literally, and we saw a retest recently, but we saw price action pull back at the on the US session, trading higher and closing bullish, which is a significant achievement. That it's telling us that more price action. Even the yesterday's one, we saw, even though price continued low, we saw price action in the top end. And this morning, the Asian market, we've seen further selling from about 2 a.m. GMT this morning onwards. We saw price revert to the downside. If that still manages to be the same, and we still keep my market move going lower, then ideally we're going to be trading back to 15,500. If we are to see a bullish upside move, we do need to clear the 15,500 mark in particular. Have to get above that. We've had 3 consecutive days where prices failed to break above that level. It's roughly around that, 15,500. Must trade above it to see further extensions higher. If we don't see price trading above that going into the US session today, then obviously we're still going to see price re-tempting those 15,500 and lower. We are very much in a negative trend for sterling. No doubt about it, we are still trading in a downside trend. We're seeing consolidation at a support and resistance level. Don't be fooled. Got to see a significant bullish bounce. A lot of momentum to confirm to us that 15,3500 for the foreseeable future is a strong support, and we should see a reaction. If we do see a market reaction, break above 1555, it will take us. We should be looking at the first target being 15,6500, and a break above that. We saw slight consolidation here at 15,7500, a bit of support and resistance. And a break above that, we'll be looking way up at the 15,900 or the 15 or 1600, or ultimately 1600, primarily because that is also a psychological major support and resistance level on those daily and weekly time frames. So heads up, we've got a lot of targets at the top, and we've got one target at the bottom. Break that target at the bottom, and we are in free fall, guys. I cannot stipulate. We are seriously in a free fall. We've got one or two areas down the bottom we could go to, possibly a pullback area, but you'll notice that we have a lot of price support and resistance at the bottom, and we could see a lot of bounces. Notice V1 there, slight hesitation there, ultimately way down here, just below 14,2500. So target 1, 2, 3, and 4 to the downside. We have 1, 2, 3, and 4 to the upside. So we've got our targets, but we want to see price do exactly that. Okay, so intraday, we know 1555, which is up here somewhere. If I can find it, it'd be great. There we go. Got to be trading above that to see any further progression. Let's see if we got that right. Yes. Okay, and the next one is at the 15,6500 mark. 1565. There we go. Got to be trading above that for upside movement. Noticeable. And then to the downside, you can quite clearly see on an hourly chart hesitation. We've broken that hesitation band yesterday. So price is trading within this channel, and we saw bright fake outs. This is the problem now. This is an hourly chart. Quite clearly, you might have been faked into a lot of trades here. It's far better when you're seeing indecision on the market to rather wait for that decision to occur. 15,3500 we know is that psychological major support and resistance long term. So you can see if price can consolidate today, but on the underside here, and keep all the moving averages above us, then we should ultimately still be looking at 15,3500 as our first target for this pair. CTC is well extended to the downside. It'll be the same on all our small time frames. CTC is showing us a sell signal. So you can see on a 30 minute consolidation here at 5,500, failure to break above the institutional moving average. Notice the high is getting lower as we've gone into this indecision, or as prices move forward, and then you'll notice that we were making higher highs, and then we had a break this morning. Break lower, moving average crossovers, CTC's in our favor, and we've now broken low. We have broken a price support and resistance level here, previously at the 15,4200 mark on this time frame. Ultimately, we're going to be looking at the 15,3500 ultimately as our next target. Why? Because that's our strong support resistance level intraday. Next up is US dollar Swiss franc, good old Swissy. Let's have a look at the daily. This has just been rallying, testing higher highs. We are at a previous support and resistance level as we speak. We've had 3 consecutive days now of indecision as we've hit this area here. Ideally, if we keep seeing higher swings, if you look at it like that, for example, you can see still making higher swings. Previous resistance becoming new support on the other side of this, and we've hit higher swings. If we see a pullback, ideally we'd like to see the pullback occur, or pull back to at least 9,100. If you see a bounce of 9,100, then we're still trading above the previous resistance. We're still above the institutional moving average on the daily, so that's good. We want to stay above that area. Clearly there at 8,900, we've seen support. So above the institutional moving average, all the moving averages evenly spaced out, and you can see that price action is pretty much to the upside here. So as price has been moving higher, we are now testing a major support and resistance level. Previously got a break above that, so just make a note of that area there. Otherwise, you're going to see consolidation taking place at 92.50, the 92.50 mark intraday. 92.50. Let's have a look here. 92.50. There we go. On our hourly chart, you can see clearly a support and resistance level above us, a major resistance level above us. Price action pretty much knocking its head against here. We do need a definite price breakout here, otherwise we're just going to see price falling lower. And where will it likely go to? Well, as I mentioned, we've seen a lot of touches. If you wanted to, you could look at, you can see there's a noticeable support area on the daily where we had the pullback and then we had bounce higher. That roughly around the 91.15. So intraday, if you want to use that as a guide, then yeah, stay above 91.15. But you can trade between where price is trading now to 91.15. CTC is still extended though. Just be aware, we're still in an upside trend. We don't want to be faked into any trade, so make sure if you're on your small time frames, you're getting genuine breakouts. Okay, so let's have a smaller time frame. Look where price is 91.15, when the institutional moving average is now on a 30 minutes. So if we see a break, CTC goes red over here, then definitely be looking at the downside. I did mention that 92.5 is a major resistance level intraday, so that can still hold on. This is where you can start looking at relative strength. Has RSI been dipping as we've been hitting our head on this top side, which will confirm the price doesn't really want to be up there. Let's have a look. Yes, you can see that. First, well, there's that attempt over there, for example. We haven't even reached it yet. Then we went through this period out, that second attempt, third attempt, fourth attempt, if you want to call it that, yet another attempt. And notice what RSI has been doing. Slowly over time, getting less and less and less. And now it's dipped below that, but it's trading below the 50 period percent, which means that it's bearish. There's bearish sentiment in this. So ideally what you're going to be looking at is potentially further dips to the downside. We could see, you take these two places that we have, for example, for argument's sake, we could see price rolling to either the wick ends or the bodies, entirely your choice. But we could see price heading towards at least the 90.20 mark before we see a consolidation taking place. Last pair of the day is US dollar against Japanese yen. Just going to look at the daily charts. It's like watching paint dry out of this pair. Noticeable support and resistance levels here at roughly the 76.10, and a noticeable resistance level at the moving average 50 period here in the 7700 mark, or 77.10, and not wanting to go higher than that. You can see the noticeable price support and resistance here besides these fake outs here, these breakouts that we saw. Price action 3 days ago, we saw bearish engulfing, and then we saw price pretty much tentatively just trading to the upside, still swinging higher, and you can see swing high, swing high, swing high, but these highs are getting lower on the upside here. And indecision candle yesterday, we want to see a decision candle, as I mentioned. Got to see decision, and as long as a decision, if we see price trading above us as a bullish engulfing or bearish engulfing, that'll tell us where price action is likely to go to. Now, US dollar has been gaining strength recently. Are we going to see it mirrored on the yen pair? It remains to be seen. We've seen a lot of movement this past week, and the yen, US dollar yen hasn't moved an inch. It's been very, very flat, very consolidative. We want to see movement, and when it does come, it's pretty much somebody's throwing something in the works, i.e. there's talk of intervention, etc., etc. Or we saw a move here, for example, because the chief actually pegged its currency, and that pretty much gave it a kick in the backside. But hence a trade flat, very flat. Are you willing to trade flat? It's entirely your choice. Time wasted? Yes. Are you making a lot? No. Is it worth it? Not really. So we want to see a genuine move to see if there's anything potentially going to be kicking this in the backside to get it really going. Otherwise, we're just seeing trading in a range. Got to see a bullish breakout to the upside here above 77.10 to give us an indication of potential previous highs at 77.70 being tested. Excuse me. Or want to see a bearish engulfing to see that this little upside trend now has come to nothing, and the 50 period moving average is pushing her lower, and we should be looking ultimately back down at the price support and resistance level here at 76.10 as our target. That's it, guys. I'll can't go into a lot more detail because if you start going into intraday charts with Japanese yen, it's too whippy. We're seeing a lot of we're going to see a lot of volatility in the next couple of days, and that'll just add to that. We want to with Japanese yen, you need to see a confirmed break, and then we'll trade it. So be aware, there's a lot of news today, and going into Friday as well. We've got a lot of interest rates announcements this afternoon, 12 noon onwards GMT. Then we have unemployment figures for the US market later this afternoon, the day before unemployment figures come out tomorrow. So factor it into your trading. If you don't need to trade today, rather stand aside. Let's wait for the market to make its move, because we're seeing a lot of consolidation ranges over the past couple of days in anticipating what's likely to occur over these next 2 days. So you don't need to be trading, don't trade, rather wait, bide your time, see what the market does, and I can guarantee you if there are any big moves, that will stick with us for the next couple of weeks. So factor it in, make sure you follow up your trading with sound money management rules, guys. Cannot stipulate it more enough. Got to back your trading up with sound money management rules, and most importantly, enjoy your trading. Keep it simple. Don't make it difficult for yourself. Keep it simple. Draw your support and resistance lines, trend lines, and see where price is trading relative to those areas, so you can work out what you're likely to make intraday or at a smaller time frame. All I can say is happy trading and trade serenely.